Good afternoon. My name's Estelle Parker. I'm one of the co-CEOs at RIAA, Responsible Investment Association Australasia. I'm coming to you today from Wurundjeri country, where it's currently goulding season or orchid season. This is where the bush awakens after the colder seasons, the orchids and wattle trees come into bloom. And I'm certainly seeing a lot of that incredibly vibrant yellow wattle trees springing up around us here on Wurundjeri country. And so that's a sign that warmer weather's on the way. I'd like to pay my respects to those who've looked after these lands and waters throughout countless seasons, and to all First Nations elders past and present. We do have a number of friends dialing in from Aotearoa, New Zealand, kia ora koutou, and welcome to all of you dialing in from across the APAC region. Now, over 500 organisations have formally committed to reporting in line with the recommendations of the Task Force on Nature-related Financial Disclosures. We know, of course, that many more are doing so internally, or they're preparing to disclose publicly, and there are very good reasons for this. Businesses, economies, and the financial system as a whole rely heavily on healthy and thriving ecosystems. But we're destroying nature at a faster rate than it can replenish itself. In fact, it's a sobering reality that biodiversity is declining faster than at any other time in human history. There's growing evidence that this poses huge risks for businesses, for capital providers, for financial systems and whole economies, and that these risks are now increasing in severity and in frequency. So all companies and investors really need to be across this and how this impacts their business. So as convener of the official consultation group for the Task Force on Nature-related Financial Disclosures for Australasia, RIAA, together with TNFD, has brought together these global industry leaders to explore the integration of nature into financial decision-making. Today, we'll update you on global trends. We'll bring to you insights. We have case studies of nature-related risk assessments and reporting, and we'll discuss investor stewardship trends as well. And these speakers are going to highlight how you can overcome key challenges to integrating nature into governance and financial decision-making. So we're starting with TNFD CEO, Tony Goldner. And after Tony's spoken, Guy Williams, a former TNFD task force member and current chair of RIAA's Nature Working Group, will moderate a discussion. So Tony will join that, as well as Ashley Gorst from Norges Bank, coming to us from London, Sally Townsend, Head of Sustainability at Blackmores in Australia, and myself. And you'll be able to ask the panel questions, so keep those in mind. We'll then hear from TNFD's APAC Market Engagement Lead, Tajeshwar Goyal, on TNFD's latest adopter campaign, and he's joining us from India today. But first, Tony Goldner. He's coming to us today from Barcelona. He's one of many Australians working in this space globally. He's had a really impressive career, a varied career. He's an economist, he's a former diplomat, he's had expertise and experience in public policy, in infrastructure, governance, finance, and he spent some time at the World Bank before becoming Executive Director and now CEO of the TNFD in 2021. Over to you, Tony.
Thanks so much, Estelle, and great to be with everyone again today. And a shout out to our colleagues from New Zealand as well, and all of the TNFD forum members. Wonderful to be in this conversation. I think there's a lot going on globally on the nature agenda right now, so really happy to be providing this update and look forward to the panel discussion with Guy to follow. So I thought I'd keep my remarks fairly brief, really, to set up for essentially give some ingredients to our panelists to chew over and have a good conversation about. So the first thing I wanted to just maybe touch on is this notion of nature on the balance sheet. I mean, we use this sort of figuratively to talk about the broader challenge as opposed to sort of literally entries on the balance sheet, but there's actually a lot of progress moving us in that direction. And so I thought it would be helpful just to do a quick sort of status update, if you like, around the key elements that are underway or now in play, and we're now seeing a lot of market participants using. So as many of you know, forum members, there are also a number of TNFD adopters and now reporters in Australia, which is fantastic to see. We have this sort of ingredients coming together quite quickly that enable companies to be assessing, reporting, target setting, and increasingly having conversations with their capital providers about nature. And it's going to be really interesting to hear Ashley's perspective as an asset owner. But the metrics are now coming together quickly. So TNFD has provided metrics on dependencies and impacts on nature, as well as risks and opportunities to the organization itself. And we're collaborating with the Nature Positive Initiative this year to pilot test metrics around the state of nature. So this is sort of the metrics around the reference state against which we're tracking, obviously, progress. And of course, some of you and colleagues around the world are experimenting or doing target setting using SBTN, and there are a set of metrics from SBTN. We're also using that basket of metrics from the three of our initiatives to advance our work on making access to data around those metrics easier. And this is the work of this Global Nature Data Public Facility, which we are currently pilot testing. And we're planning to release the recommendations around that at COP30 in a couple of months' time. So it's really exciting. We've had an amazing global participation, both from upstream data providers as well as downstream users, around that testing of the idea of a data facility, which can help to make access to high quality, auditable data around nature easier and easier to find and easier to use. So a lot of progress on the metric side. On the target setting side, SBTN this year has released additional methods that now cover land and freshwater. So there's a lot of progress on the target setting side. I would say at London Climate Week, there was quite a lot of discussion around the role of target setting as part of transition planning. And again, it might be really interesting to hear from our panelists about what they're seeing and what they're experiencing. But I think the focus on science-based targets is still incredibly important around a robust transition plan. But I think people are finding it challenging and complex. And so there's work underway to figure out how to make that aspect of this work a bit easier to both to access and to undertake from a practical sense. Transition planning itself, so TNFD has published a discussion paper on transition planning. We are currently pilot testing the development of nature in transition plans with 14 organizations around the world. Some really interesting progress. It's going to be fun to see where that comes out. And what we're hoping to do, as we did with the FORICO disclosure report, the TCFD, TNFD disclosure report that FORICO sort of pioneered for us at our launch 2 years ago, to show what's possible. We were hoping that a couple of our pilot testers on the transition planning side might be able to get as far as producing an illustrative report so that we can see what that actually looks like in practice, which is very exciting. Many of you are using the LEAP assessment approach. So the assessment part of this is there. It's, I think, now become a bit of a global industry standard. It's referenced in the CSRD regulation in Europe as a tool to use. And we're increasingly having conversations with standards bodies like ISSB and even ISO about how to sort of build this into standard enterprise risk management processes as well. So we're excited about the uptake in LEAP, and we've been continuing to get very positive feedback globally about its utility in helping people get started and understand their issues. Of course, that then feeds into corporate reporting. And then the final new piece, which is emerging quite quickly, and we're very happy to see progress on this year, is around corporate natural capital accounting. And again, this is something which has got Australian leadership written all over it. Rain Vandenberg, who was at FORICO, had led on developing corporate natural capital accounts for FORICO in Tasmania. We've seen other Australian companies inspired by FORICO's lead pilot test the use of corporate natural capital accounts in their companies. And this year, there's now been a new initiative announced with Capitals Coalition and the International Sustainable Forestry Coalition. And we've currently got, I think, 18 or 19 global forestry companies pilot testing the use of natural capital accounting in the forestry sector, and hoping that that will inspire others in other sectors to take on board this. And why is that important? Well, that literally starts to get nature recognized in numbers in the core financial reports, or very much alongside the core financial reports. But it also provides this powerful evidence base for supporting things like corporate reporting, transition plans, target setting. And so this is sort of the next frontier in the agenda, but I think it's a really powerful tool, and it's great to see it starting to get some traction. And I'm particularly delighted to see the Australian leadership around this. So kudos to Rain and the team for pushing this forward. The two big drivers that I think we have to keep in mind here, which is shaping this, is the regulatory and standards landscape, which I might say a little bit about in a second, but also increasing demand from investors. And again, we'll hear from Ashley in a few minutes, but what we're hearing at the Secretariat, when we ask people, why are you getting started on nature and what have you found over the last year or two? One of the consistent themes coming up is that more investors are asking more questions, and the questions are getting more specific. And so companies are being challenged to demonstrate that they're not just thinking about nature, but they're actually doing the analysis, and they've got answers to some of these questions to satisfy investor needs and investor demands for information. So there's this very productive cycle, I think, kicking off, and that's all being fed by investors realizing that there's risk in their portfolios that needs to be managed. And again, Ashley and NBIM have done a terrific report this year on their climate and nature findings, and we'll hear more about that in a minute. But I think in some respects, that's become a reference point for what's possible within the investment community. So all of these pieces coming together, I might just touch on a few things in a little bit more detail, and then I'll hand over to the panel. So if we can move to the next slide, please. Before I do, I just wanted to kind of summarize at a macro level some of the key findings, because I think this agenda is actually moving quite quickly despite the geopolitics and the pushback around ESG that we're seeing in some markets, most obviously the US. First of all, I think more and more participants in the market are realizing that this is about value and resilience. This is not a compliance exercise. And obviously a lot of people come to this agenda from a corporate reporting background. That might be their function in their company, or they're thinking, because of the D word, the disclosure word, this is about reporting and getting the paperwork done. But the conversation inside companies and investors and insurers, capital providers, is really changing. And I think to Estelle's introduction, nature loss is accelerating. Nature's ability to provide those flows into our business processes is eroding. And our cash flows depend on those nature flows. And so I'd really encourage all of you to think about this relationship between nature flows into your business and the cash flows that are coming out of the business, which of course are important to your shareholders, not least of all your investors and others. So that central point, I think, is really starting to sink this year in the last sort of 12 months. And building on that, TNFD with Oxford University and Global Canopy released a couple of months ago, I think, a really compelling body of evidence of financial materiality of nature risk. Some 600 individual pieces of evidence in that report. And so if you're still in doubt, or if your CEO or CFO is still in doubt, or other stakeholders in your corporate environment are still in doubt, I would encourage you to point them to that research, because I think it is now changing the conversation from, are you looking at nature as a risk issue, to why are you not looking at nature as a risk issue? I mean, I think the burden of proof is now shifting. Central banks and insurers are also signaling that nature risk is on the rise at a systemic level. There have been some amazing comments recently from Frank Elderson at the European Central Bank, who's been very strong on this issue for a number of years, but also other central banks now starting to talk more about nature as a systemic risk issue. And of course, we're seeing nature risk being priced through the insurance markets, not least after enormous events like the LA fires, and other major global events. And so the pricing signals are now very much alive, and they are flowing through the economy. I mean, even just in the last few days, we've seen jellyfish swarming French nuclear reactors and shutting down 4 nuclear reactors at a French power plant, right? So you don't have to look very far to find more and more evidence of nature risk materializing and impacting core pieces of our economic and social infrastructure. So I think nature has really shifted from a nature is next story, which we were hearing sort of 2 years ago, to it's very much now. And what we're seeing is, as I said, despite the politics of the moment and a lot of discussion around the future of sustainability and ESG, every time we're doing a webinar or doing an in-person event, there's a lot of people attending and everyone's got their head down doing the work. So we're very encouraged by the ongoing momentum. And that's translating into first and second generation TNFD reports. Some companies have already done 2 years now of TNFD reporting. As I mentioned, with investors like NBIM and others, that's now providing a flow of decision useful information through the investment cycle and into investment decision making, which is the ultimate purpose of TNFD and others tools like ours. So I'm very encouraged by the progress, but I think it's important to recognize that there is this sort of shifting mindset now from compliance to value and resilience. If we can move on to the next slide, please. I think there's just a few other details here about some of those points. Many of you are interested in seeing other illustrative reports from around the world in sectors like yours. We've now got 120 illustrative reports on the TNFD website. So with a search function. So if you're interested, you can go and have a look. It's pleasing to see a number of Australian TNFD reports up there as well. So whether you're interested by jurisdiction or by sector, we've now got this fantastic resource with access to PDFs to TNFD reporting. So I encourage you to have a look, have a look at that if you're interested in seeing what's happening around you in your sector or jurisdiction. On the next slide, I'll just give you a bit of a sense of, or maybe a bit of a teaser or a preview. At New York Climate Week next month, we will be releasing our first ever TNFD status report, which we're really excited about. I won't give away too much detail today, partly because we're still actually assembling all of the data, but we're delighted to see we had 800 responses to our recent survey. So thank you to all of those of you who have participated in that from Australia. And the insights coming through are actually really encouraging, and we're looking forward to sharing more detail. And we've had the support of Bloomberg, CDP, Net Purpose, and NeuroAlpha. So we're sort of triangulating a number of different views on what's happening in the market around nature. And we've got some interesting data to share, not just on assessment and reporting, but also uptake of specific metrics. And also things like the cost to prepare reports. We ask people how much money they've spent preparing their TNFD reporting, and I know a lot of people are interested in insights around sort of how people are doing things, how much it's costing, and the capabilities required. The good news is if we look across the 14 disclosures, we're very encouraged by the level of uptake across the 14 disclosures and the number of companies that are doing significantly more than one disclosure, you know, in the sense of getting started. So again, I won't share too much detail now. We're still processing it all, but we're looking forward to sharing those insights with you in about a month's time. If you do want a teaser, there's a very interesting website on our a webinar on our website with some initial research done by Lancaster University in the UK, which I think is indicative of what we're seeing coming through from the other data. But overall, very positive trends globally across assessment and reporting and use of metrics. We can go to the next slide, please. So the standards landscape. There's a lot happening on the standards landscape at the moment. As you know, in Europe, CSRD and the European reporting standards are being reconfigured. TNFD has actually, somewhat unusually for us, written a sort of open letter to the standards bodies. And in the spirit of simplification in Europe, which is the political driver for revising the CSRD arrangements, we have actually proposed that they combine their 4 current nature standards into one integrated standard. And they could do that drawing more closely on the TNFD because, of course, we have taken an integrated approach. So we are trying to productively drive a streamlining of the standards landscape around nature to make sure that it's both science-based but also practical. And we will continue to be working with the European standards bodies, but also ISSB over the course of this year. I think the end of October is going to be a key moment for major announcements on the standards landscape. The European standards revision is expected to announce the sort of final form of its revised requirements in late October, early November. And that's also around the same time we're expecting the ISSB board to announce its approach on nature as well. So keep an eye out for the fourth quarter of this year. I think there'll be more clarity around how nature is going to make its way into the global baseline for reporting. But from a TNFD perspective, excuse me for my voice, from a TNFD perspective, there are 4 or 5 things that we're really driving towards. One is we think it's important to maintain an integrated approach and mindset to nature beyond climate, and in fact, drawing climate and other aspects of nature more closely together. We think it's really important that we maintain a focus on understanding and responding to dependencies and impacts, as well as risks and opportunities. At TNFD, we've provided an adaptable approach or an agnostic approach to materiality. And so it works whether you're in a single or a double materiality mindset and set of requirements. And we shouldn't lose sight of the fact that while the metrics and the quantitative data points can be overwhelming, and this was one of the major points of feedback in Europe, we need to really stay focused on what's decision useful and meaningful for investors and other stakeholders. And I think in Europe, there's a realization that there was way too many data point requirements, and so they're trying to strip that back. And so there's a very important conversation, I think, in the next 3 or 4 months around what's going to be appropriate in terms of the balance of quantitative versus qualitative insights. And not everything has to be in numbers to be decision useful, but finding that balance and that sweet spot, I think, is one of the key challenges in the standards landscape right now. And then, of course, being aligned to global and national policy goals. So our work is continuing. We are spending a significant amount of our time now trying to embed TNFD into the standards landscape with those partners, and that work is proceeding really well. If we move to the next slide, thanks. I also just wanted to draw attention to this piece of work on guidance for board directors. So we've been trying to now develop guidance that addresses the needs of specific decision makers in business and finance. This guide was launched at the Singapore Stock Exchange earlier this year and has been incredibly well received globally. In fact, I think amongst Chapter 0 director members on the climate side, this has been one of the most downloaded documents in the climate director community as they start to enter into this realm of nature. So we're really delighted by the uptake of this. And I was very pleased to see from the AICD conference just the other day, I think Mark Rigotti made some statements that, now that climate is kind of arrived into the Australian standards landscape, it really is time now for Australian directors to upskill on nature beyond climate. And that's precisely what this short document is designed to do. It's built around 12 questions. So whether you're a board director or you're advising board directors, I'd really encourage you to have a look at this. We've developed it in collaboration with many other experts, and in fact, insights from board directors themselves, including many Australian directors, gave us fantastic input into this document. So we really are trying to engage boards because one of the consistent things we've heard is that while a corporate sustainability team gets these issues, they're often struggling to win the support of senior stakeholders in their company or on the board. And so that upskilling of board knowledge and senior management knowledge around these issues is a key priority for us this year. And I'm really delighted to see the response to this particular document. So if we move on to the next one, I think I probably covered this. This is the work around the corporate natural capital accounting work. I think we can probably skip over this, all of this to say that I think this work is moving quickly, but it also provides an opportunity for a COP31 focus on bringing climate to nature together under Australian leadership at COP31. So that's one of the driving ambitions, both for Brazil and for COP31. And I think the climate and nature agendas will continue to come together. And I think this is one place where we could potentially work together to try and get this as a focus for hopefully an Australian COP31 next year. So I'll stop there. Hopefully that's plenty of food for thought for our panel and for the conversation. On the next slide, and we're happy to make these slides available, there are a couple of QR codes if you'd like to quickly access some of those documents that I mentioned. But delighted to listen to the panel discussion, and please do think about joining us as a new Australian adopter for COP30 in the next couple of weeks. Thanks, Estelle.
Amazing. Thank you so much, Tony. And we will jump straight into our panel. Tony's going to stay with us. And of course, we have Guy Williams moderating, Ashley and Sally joining us. So over to you, Guy.
Thank you so much, Estelle, and thank you so much, Tony, for those opening remarks. It sets us up really well for a great discussion. We've got a good chunk of time for this discussion, and the Q&A function, I believe, is open or just about to be opened. I encourage you all to put in your questions for the panel, and we'll have lots of time to get to those in a moment. We're going to keep this, these are an amazing bunch of panelists we have, and they've been introduced already, but Tony, Ashley, Sally, and Estelle. So we've got great time with them. We're going to keep it pretty conversational. There's a couple of questions I'd like to ask of all of them to kind of kick us off. But as I said, the Q&A function is open, so we'll get straight into it. Tony, right back at you straight away, not giving you a pause. But congratulations. We're obviously seeing significant uptake across a range of different sectors and jurisdictions of the TNFD recommendations. But we still see some that are sitting in the wings and waiting and watching. So I'm really keen just to get your reflections before I go to the other panelists around some of the most common challenges and barriers that you're still hearing, particularly from boards and senior executives, around why and when and how to integrate nature into financial decision making specifically.
Yeah, thanks, Guy. I think I'll highlight a couple of things. One is just the general mindset challenge of getting people to reframe how they think about nature. So I've talked about this compliance to value and resilience mindset shift. I think we've still got a lot of people we have to take on that journey. But also understanding more conceptually the link between nature flows into the business and cash flows coming out of the business. I think there's still a lot of work to do about how does this fundamentally drive value creation and potentially create risk. And I know Sally has done some really interesting work at Blackmores on this. I remember our very first conversation at Barangaroo on this, and it was quite fascinating how they've started to think about it. But we've got a lot more companies that have to get into this mindset of looking at the dependencies that they have on nature and really understanding this concept of dependencies, because it hasn't been a function or a feature of the climate mindset and the climate thinking we've been doing for the last 20 years, but it's absolutely essential to this broader discussion around nature. So value and resilience mindset, thinking about dependencies is still a big challenge. And I would say the third one that keeps coming up and is difficult, and we're still working on practical guidance we can offer on this, is the financial quantification of risk. And there's a lot of work we've been putting into that, trying to help both financial institutions and investors look at it from their lens, but also within a company. How do I turn this into numbers that I can put in front of the CFO? I think this still remains a real challenge. There are some companies who've done that very effectively in quite bespoke ways. And so I think everyone's looking for a consistent method to do that. It is hard. We're working on it. We're trying to learn from best practice in the market. And interestingly, there's a big debate about how much of that should be required as part of reporting. And those of you following the details in Europe will know that the European Standards Body has actually now suggested that those quantification of those things be voluntary, not mandatory. And the ISSB has come out and said, well, we would actually be concerned if it goes that way, because this is central information of value to investors. So it's both a topic of heated debate in the standards landscape about whether it should be expected or it should be voluntary, but there's still a lot of work to do on the methodology piece so that we can make it easier for people to do. And I'm sure Sally and Ashley can offer us both a corporate and investor perspective on that.
Yeah, I think, Tony, you nailed it when you said we can't quantify the risks, absolutely, but equally we can't quantify the opportunities. So if you're looking at our interface with nature, our biggest risk and dependency and opportunity that we've got actually isn't in the facilities that we own and operate, it's in our supply chain. And so, say, for example, hypothetically, we know that deploying nature-based solutions at a particular site that we're dependent on, like, for example, doing strategic tree planting, it provides a really valuable carbon sink. It would help regulate water. It would support biodiversity. It would enrich soils. All of those things would be amazing nature outcomes that would both mitigate risks and create opportunities, but none of them can be quantified with the sort of data to us as the vendor that a board would be used to seeing or that a CFO would be used to seeing. So there is a disparity between the data sets that they would traditionally see in a business case in order to quantify the risk and the opportunity, and those that we're able to do through nature. And some of that echoes back a little bit to the fact that this is still maturing as we bridge that gap between, I suppose, an environmental challenge and a corporate challenge, that we're bridging some knowledge gaps between those, but also that we're learning to interpret and understand the data that we're getting our hands on and work out how to work that into, the corporate discourse that we're used to. By comparison, I think you think of it from a business case perspective. If I were looking for investment into a heat pump to decarbonise something in our business, I could quantify the decarbonisation potential, I could quantify the efficiency, I could quantify the financial, impact. But likewise, if I turn the same amount of investment into a nature-based solution, I wouldn't have the ability to do that, but it doesn't make it any less important for us to move forward on. And I think it really highlights the importance of getting started early so that we can start to bridge that sort of capability gap and the knowledge gaps that exist, while we sort of address the challenge at a corporate sustainability level and speaking in the language of the CFO and the board.
I was going to ask this question of Tony, Sally, but I'll put it to you. Around the divergence of a climate agenda and a nature agenda, and not as quickly and effectively and truthfully these two agendas coming together. Do you see that still playing out as an excuse for inaction, as a barrier, a challenge?
I think, to be honest, I think it was born out of two things. One of them is to do with bandwidth within an organisation, that it's seen as we just can't deal with nature because we're so busy with climate. I think anyone that started their journey within nature understands how deeply interconnected they are. But my feeling is that it is the most efficient way to go about it to do them together, not only because they are deeply interconnected, but when you have a look at remember when ASIC announced the change to introducing the AFRS disclosures in Australia, he said it was the biggest transformation to corporate reporting in a generation. Like, if we're deploying that level of change within our organisations to be ready to make climate disclosures, in the next 12 months, why wouldn't you, implement nature at the same time? When you have a look at the amount of overlap between them, you're looking at the governance structures, the accountability, the systems for identifying and quantifying risk. You have to do that for climate anyway. It makes perfect sense, given the strong relationship between the two, that you do the job well and you do it once. And I think that's probably the biggest motivating factor for getting started early on TNFD. I agree, certainly. And Tony, just for you as well, because I know obviously it was baked in from day one into the very structural foundation of the recommendations of TNFD, that lifting and leverage off TCFD. But does it still come up in conversations that the nature climate divergence?
Yeah, it does. And I think that's just the way we've all been trained to think, right? Because we were told 20 years ago, we need to, as a global community, we need to get on with climate change. And so we've all learnt a whole language system and a mental models and carbon budgets and CO2e. And, there's a whole language system and mental model training that we've essentially gone through for 20 years since the Stern report in 2004. Saying this is important, and the policymakers said, well, we're now going to go and do something about this thing called climate change. But of course, it is only one of the 5 drivers of nature loss. It is one of the 9 planetary boundaries. But we were all told to go and focus on that because it was a policy priority, and now it's about bringing the rest of it into the frame. So at TNFD, we're now increasingly using this phrase, nature beyond climate, because of course climate is part of nature. It's not 2 separate things. Now, we refer to it as 2 separate things just because we're saying, well, we've done that work and now we have to do this work. But we have to Sally's point, we have to not forget it's all interconnected. And I'll just finish with a quick story there, Guy, which is I had an amazing conversation about 2 years ago with a listed global consumer goods company that said to me, we've just done our LEAP assessment and we hired some smart consultants to help us quantify what this means in financial terms to the company. And the size of our nature-related issues is bigger than our climate issues. And so it completely changed the conversation in the management team and the board. And they realized they've been focused over here. They've got bigger issues over here that have been essentially left unattended to. And I know this is what's keeping people like Ashley and many investors awake at night now, which is where are the unaddressed risks in the shadows And TNFD is like a flashlight or a torch. It helps you see those things you haven't seen before and then start taking action on them. And we keep hearing that story now increasingly more frequently, which is our nature issues, even directionally, are bigger than our climate issues. And so we're now redeploying our focus. And I'll just give you another example. GSK in the UK are now spending $1 billion over 10 years on building up the resilience of their business in the face of climate and nature-related issues. So they've now got a systematic program in place, recognizing that the resilience of their business sits on top of the resilience of nature, and they're figuring out where are those vulnerability points and putting in place a series of programming investments to make sure that they can manage through that over the course of the next decade. So it's a fantastic example of doing the analysis, informing the decisions, and making specific capital deployment decisions about the long-term best interests of the business. And none of that has anything to do with regulation or compliance whatsoever. It's about managing the long-term best interests of the business.
Yeah. Estelle, just inviting you into to respond on the same question, but particularly from the Australia and Aotearoa industry, what we're hearing around common challenges. I know data still plays out an interesting one. Too much data, not enough data.
Yes, indeed.
Just your thoughts on that.
Yeah, lack of standardization of data. I mean, that's kind of, as TNFD consultation group convener, that I would say is singularly the biggest challenge that I hear about. And I think there is kind of some truth in that, but it is improving all the time, and that data is becoming much more accessible, particularly when you're looking at terrestrial ecosystems, at things like water, and of course deforestation, which has already been mentioned. So we have, global data sets from environmental organisations. TNFD's really leaned into this. As Tony mentioned, they have had this data catalyst a few years ago, and that brought together organisations working on nature data solutions. And now we have this online tools catalogue that has something like 220 data tools that use all these solutions like satellite imagery, like audio monitoring, remote sensing, and so on. And I've noticed that increasingly AI as well is being used to automate some of the visualizations and analysis. And then Tony also mentioned this public nature data facility, which is really exciting to see happening. But we also have the CSIRO here in Australia leaning in as well. They have this geospatial platform, and that, where you provide them with your asset locations and some other information, the CSIRO team will actually provide you with information and data requirements, and that can also provide a really good level of insight. And the Australian government, there's this Environment Information Australia that has been established, and that includes within it, and not many people kind of understand this yet, but there's this interactive platform that has information at the ecosystem level, and that's helping people to understand the trends, and that's been continuously improved as well. So, I would acknowledge, Guy, that we do have a bit of a way to go, and there is some inconsistency, of course, that lack of standardization that I mentioned before. From a perspective of RIAA, Responsible Investment Association, investors are using this, and the purpose of TNFD to kind of compare companies. So standardization will help, and there are gaps in some of the other ecosystems like marine ecosystems, soil health, and so on. But I think there should be enough kind of data that does have integrity to get started with TNFD reporting, and we should really be using the data that we have and building on it.
Great, thank you. Ashley, bringing you in at that wonderfully early hour of London into the conversation. Tony mentioned the need to obviously make assessment and action kind of easy, practical, actionable. From your work, both with Norges, but also broadly across your career, just where you've seen promising approaches around assessing materiality and starting to identify the financial opportunity and mapping of risk, just where you're seeing good examples of using what we have to make actionable decisions.
Yeah, thanks, Guy. I think the first thing to say is that this is a bit of a journey, and particularly in talking to our companies. I spend a lot of my day talking to the companies that we invest in. We own at Norges about 1.5% of the entire global stock market. So we own nearly every company that's publicly listed out there. So we have a tremendous access to our companies, and we really love to just hear how they're doing things. And these are not one-off interactions. These are continuous interactions we have, so we can see the companies go on the journey. Now, the companies that are doing this really well on the risk and opportunity side are the companies that really have a direction of travel and an aim in sight. And here the aim being, I want to understand my own financial exposure to certain risks and the potential upside. And I sort of want to make a bit of a plan to get there. Now, for most organizations, that getting to that ultimate answer will not happen straight away, or it will happen in a small part of the business. So the first thing I want to say is that this shouldn't be seen as one huge exercise in which you have to look at all the different areas that you are exposed to nature and then quantify all at once all the different potential outcomes that could be financially material. This is about starting in a small area of the business, perhaps, and doing that in a way that makes sense to your business. Now, the second point is linked to that, and it's really starting with your business. I think one thing with nature is we often get confused about the complexity, and we get really focused on, I think, the kind of bottom-up view that there's ecosystems and there's all these tremendous ways that ecosystems impact us and planet Earth. But for a lot of businesses, I think that the kind of mindset switch, and I think this is kind of where Tony was pushing us towards, is really making this sort of company-centric from a TNFD perspective. So really starting from, I want to understand my financial materiality, and this is what my business looks like. So my business has supply chains, and the impact if my supply chains get screwed up is severe or not severe. Now, most businesses will have an idea of what a supply chain disruption looks like and the impact of that supply chain disruption. So it's really a matter of then linking nature loss to that supply chain disruption as an example. So this isn't going bottom up and saying, what are all the different ways that nature could impact my business, and how could this impact all the different the ways that this could impact my cash flow. This is picking a few areas and doing this really well. Now, I think if you look at sort of some of the businesses that do this well, so I'll point a few examples. I think some banks do this really well. Now, banks have a real financial interest, clearly, in understanding their risk exposure. So if you see certain banks, and there's some excellent examples on the TNFD website that Tony and TJ shared earlier. Some banks do excellent examples of how they have quantified the value at risk from nature-related financial disclosure. Now, shifting slightly onto the opportunity side, because I just want to say one thing on the opportunity side, because I think this is something we will get to. We have a tendency in nature to think of nature as really niche. We think of it as planting trees, we think of it as bees, we think of it as all of these things that, I don't know, we have a personal connection to. I think the way we try and think about it as investors at a large, diversified global investor, and in talking to big multinational companies, is that nature is really integral to the way that the industrial process works. And in our view, that any business model that makes a slight switch to the way that that business model works and is linked to nature is classed as a nature-related opportunity. So this doesn't need to be planting trees. This can be switching your business model away from single-use plastics to more recyclable alternatives. This can be switching materials from a certain type of textiles to another type of textiles. And I think what this does is this really expands the decision set out there. towards a much broader set of outcomes and a much broader set of inputs into the business that really, I think, gets boards thinking that this isn't something that is niche and small scale. This is about long-term value to my business. This is about transformation I can understand based on previous transformation this has happened. And then the final thing to say is that we focus quite a lot on challenges, but in talking to companies, I think we are seeing this issue cut through. And in talking to boards, a lot of boards I talk to now are aware that this is part of their coverage and are on top of this issue. And I think once boards are on top of this, it's sort of just a matter of time until this starts to cascade down a business. Now, would we like them to be doing more? Yes. But have we established a good starting point? I think we have.
So much gold dust in that, Ashley. Thank you so much. Just two things, and I'll hand over to Sally. One was, I think, coming to Tony's point around what we've just carried directly across from the climate conundrum, is with nature this sense that we need to solve it and fix it as soon as possible. It needs to be assessed and worked out across all aspects of nature, across all of our business and operations, and that's just not how it kind of works out. So this sense of having a goal and having a vision, but being able to strategically select and prioritize where you take action and where you go deep, I think is wonderful advice. And Sally, a really great segue to your work at Blackmores and that kind of careful, measured, selective prioritization around where you focus to build that case. Just any reflections around the approach you've taken there? And just coming.
Sorry, I agree with everything Ash said, except for our approach was slightly different when it came to looking at our own operations. We really only did leap assessments of our own operations as a way to have the training wheels on and a safe space to get familiar with how to actually undertake risk assessment so that we could have more informed conversations in our supply chain. But the reality is that our nature interface, both at a risk and opportunity level, wasn't in our own operations, it was in our supply chain. So speaking to a lot of people on where to get started, everyone has just said, just focus a little bit like we did with Scope 1 and 2 emissions. You just focus on your own business. For us, I think that would have been really misunderstanding the assignment because of the uniqueness of our business as far as the dependency on nature for our supply chain. But what we effectively did is took our full product portfolio and we divided it into 4 categories depending on its interface with nature. So for us, that was what comes from a farm, what comes from a forest or wild harvested, what comes from a factory, and what comes from a fishery. And then we developed ways of assessing the indicators for impacts and dependencies for each of those, which gave us a heat map. And we did need to augment our own internal resources by working with, people like the team at Pollination in order to do that. But once we had the heat map, we had a way of actually prioritising where our focus went. And we've been steadily working through where we focus on our highest area of risk effectively. And that's really helped us. We've done more than 10 now at a very deep level. And I think the one thing that I've noticed from doing that is as we've gone through, the 2 things that have really evolved is our ability to take the insights and generate them into actions. Like, how does this result in a change to a sourcing standard, a supplier agreement, the sort of indicators that we're monitoring and measuring ongoing. And I look back at the work we started 3 years ago that we felt was very groundbreaking. And I feel like it was, we've come a long way since then. And to me, that actually shows, I think, companies that are saying we're going to wait till TNFD is mandatory and then we're going to get on with it have missed this beautiful runway into really truly understanding how to approach it in a way that's relevant for your organisation. And they've also missed the opportunity to unlock the benefits that you can find as you're doing it, because we did start doing this as a risk exercise, and what it's ended up becoming is a way to recognise value that was unrealised within the business. And I think you're not doing that if you're not giving it a chance to really understand your relationship with nature at an impact and a dependency point of view, and to really have some of these conversations along the way about how you, turn that into actions that can be embedded into basically a transformation for your business so that it is more regenerative in your model. And the one thing I think I would add on to what Ash said about it's not just about tree planting, you've got to think really broadly about it. Lisa McLean from Circularity Australia said to me that circularity is an economic model for solving for both climate and nature. And again, I think it echoes why so much to just focus on, we're doing climate, we're doing nature, we're doing circularity, or for us even doing the human rights piece, how deeply connected all of these things are. So for example, where we've been able to do things like increase recycled content in packaging materials, we've completely eliminated an interface with nature and reduced our carbon emissions as well. And I think what we're looking for is opportunities here where you can, you know, stack your benefits and maximise your effort by bringing all these different sustainability priorities together.
Thank you so much. Tony, just following on from that moment, we hadn't prepared this question, just letting you know. It's a bit of a demystification around TNFD, this sense that like you need to do it all everywhere all at once now, versus this really smart guidance, I think, coming from both Ashley and Sally's experience around setting yourself those realistic priorities around where you go deep and focus. Just kind of thoughts from a TNFD Secretariat perspective around those businesses that are panicking that they don't have the bandwidth and resources to do it all straight away.
Yeah, we tried to use the release of that movie, Everything Everywhere All at Once, to say that's not what you have to do on nature. Because our mantra when we launched the recommendations in September 2023 was just get started. So it was very much aligned with Ash and Sally's points there. And I think, you know, Sally's been a great example of like just dig in and get started. And the revelations come as you work through the process, right? So you just heard, like you start off thinking this is going to reveal risks, and then suddenly it ends up revealing opportunities as well. So we keep hearing these stories. I think the sense that it's overwhelming is back to Sally's point about sort of capabilities and just knowledge. And so that's why knowledge within the organization, that this all feels enormously big and scary. I mean, we're talking about the planetary boundaries and the planetary systems is sort of, I'm not a scientist, I can't possibly make sense of this stuff. So we've tried to break that down into working with the scientists to put it in a language system that people in business and finance can understand. And I think that's what LEAP is designed to do. The other thing that's been quite interesting is when people take that step over the transom and start a LEAP process, they actually find it incredibly interesting. But personally, right, it's sort of like revealing new aspects of their business they hadn't been thinking about before, or suddenly the environment guy is talking to the corporate reporting guy and they realize they've got more information than they had. And so we hear these interesting stories about the process of doing the analysis as being quite energizing as well. So I do think it is about getting started, and you'll see this in the status report results next week, that there are a certain number of companies, a certain percentage of companies that have managed to do disclosures against all 14 of our recommended disclosures in their first or their second year. But there are a lot that have only done 1 or 2, maybe 3 disclosures, and that is entirely consistent with what people did with TCFD 7 or 8 years ago when they first got started. The average number of TCFD disclosures in the first year was 1.4 disclosures. So people got started by figuring out like, is our board talking about this? Can we say something about our board governance on climate issues, right? Or maybe it's already in our risk management approach. So I would just echo the point. I think it's about getting started and then scaling up your analysis and your disclosure ambition over time. But the other driver in the other direction, as I said before, is smart investors like Ashley are coming and asking more questions, and the questions are getting sort of more pointed and looking for more insight. So there is a sort of interesting push and pull. But I think Sally's guidance is the best, which is don't delay and wait till this is mandatory. You should be starting to get your head around this now, because I think people who did get started early are feeling quite well prepared as the regulation kicks in. I can tell you plenty of stories from people in Europe who had got started on LEAP and nature before CSRD came in, and those who didn't. And the ones who didn't suddenly felt panicked that they had all of this due diligence work they had to do on the European standards beyond climate, and they didn't have any muscle memory, they didn't have anywhere to start, they didn't know which consultants to potentially call in or which science experts to speak to. And there were quite a few CSOs sweating from the brow towards the last sort of 3 or 4 months of CSR, thinking, how am I going to possibly have anything credible to offer on this? So get started early. Yeah.
While I've got you, I'm going to do a cheeky swing into some of the Q&A coming through from the audience. And there's a couple that relate to environmental markets. In the context of Australia, we're seeing some long overdue but exciting movement around the nature repair market. You may have noticed, Tony, in the last week or so. And this question around opportunities and being able to lift and leverage work on risk to then propel into identifying uplift in particular assets. Just kind of your thoughts around where you've seen really good approaches around focusing. I know it's emerging work for parts of the TNFD around the opportunity landscape, but the intersection with environmental markets in particular, and anything that you can see from organizations that are doing that better than others.
Yeah, I think this really is, the interface with nature markets really is quite nascent. And, you know, Australia is one of the first places that's gone out with a sort of regulated or government-backed nature market of some sort. The other obvious place is the UK with the net biodiversity gain approach. So I think we've got a long way to go in terms of sort of biodiversity credit markets is another concept, or biodiversity credits following carbon credits. We tend to sort of like to say, well, it worked over here, so it's going to work over there, so I better start thinking about that now. My view is we will probably end up with regulated biodiversity credit markets around the world. I'm not sure what the demand's going to be in terms of voluntary credit markets. I think it's still maybe too early to tell. And I certainly would hope that people don't periscope in all of their opportunity attention on credit markets, because I think it's going to ultimately be a tiny part of a broader landscape of the opportunity space. Ashley really, I think, now hit the nail on the head when he was talking about switching, because I think the really big opportunity, I'd love to hear Sally's views on this, I think the really transformational opportunity is for companies to think about substitution or switching things within their existing supply chains that are perhaps quite nature negative today, that are things that are either less nature negative or may indeed be able to contribute to nature positive outcomes, in the sense that if you're using, say, biodegradable material, you could be solving a packaging solution, but it could also have some benefit for the planet, right? Or the companies that are using water, maybe cleaning water and returning it back into nature systems, right? That would be a positive impact back into nature. And in fact, the TNFD framework is designed to measure those positive impacts as well as the negative impacts, because we obviously want to recognize, and hopefully investors will reward companies that are having those kind of impacts, not just doing less bad, but actually contributing to positive outcomes. And some of those could be revenue generating, right? Maybe we move into a world where companies that can return water to nature at an appropriate standard are getting paid by the government to do that, or getting some rebate or something. So I think we're right at the beginning of these, how the opportunity space can evolve. But product sort of innovation and product substitution within supply chain seems to me to be a really exciting and obvious place to start. And it's also a place where existing capabilities in companies are very well configured to start figuring out those solutions.
I might jump in there, if you don't mind, Guy, just on the nature repair market, for the benefit of our viewers, that just to let them know that the voluntary Australian credit market has opened. So it was about a week ago that the first project was registered under the nature repair market in Australia. And that's a property in New South Wales that's going to be planting trees and restoring vegetation to support native ecosystems on top of cattle grazing. So they'll be improving their land management practices to include biodiversity, and also carbon market planting projects there. So I think, like, you know, TNFD and these markets, there's a lot where they, you know, for example, where they kind of overlap. So for example, the data solutions that we need to underpin these nature markets. So we've got the support for the emergence really of the same data. And, you know, as Tony's mentioned, like both need the robust kind of accounting regimes to support those opportunities. And I would say as well, like both really support the link between climate change and nature, and that they are both inherently linked. So nature-based solutions will become a really important risk management tool for mitigating biodiversity risk, but also climate adaptation risk as well. And I think we'll probably see that those carbon and biodiversity markets will start to overlap, not just here in Australia. You know, it comes with some challenges, of course, like there's a lot of complexity in all of this, but as Tony's mentioned, there are lots of opportunities as well.
And I might just add to that, Guy, as you know, we've put out a lot of work on metrics and recommended a lot of metrics. I think it is a great opportunity as these markets emerge to use the same metrics. We obviously have the huge benefit on the climate side that everyone's organized around CO2e as the sort of common metric. We do need a set of common metrics for nature beyond climate. We have tried to put forward a set of 9 core disclosure metrics, but I think as a sort of representative basket of impacts and dependencies on nature, that could be a common set of metrics. And if markets that are coming online use the same metrics, I mean, gosh, that would create huge efficiencies and synergies for companies if they could be participating in a market on things they're already measuring and using the same metrics for multiple purposes, whether it's reporting, target setting, transition planning, or participation in markets. So we'll be encouraging market developers to do that, and I think our metrics are there to inspire people to building some of those markets to use those as a starting point.
Yeah, I mean, and I'm interested both Sally first maybe and also Ashley, this kind of idea around being able to use measurements to look at risk exposure, and that may be used not just to divest or step away from those vulnerable or risky suppliers or products, but also to help improve, to have that uplift. And whether you're seeing that, Sally, in your engagement with your suppliers?
Yeah, and I think the other benefit in having common sets of metrics and standards that we're working to is that there are going to be so many interventions that should actually be addressed sectorally or as a value chain. And again, that's the only way we've been able to make good progress in this is where we've worked collaboratively, in most cases through our own supply chain, in some instances deeper across the value chain, and sometimes across the sector. Because when you have a look at some of the, for example, sourcing regions or certain types of commodities or things like that, once we all start reporting on things, it's going to be apparent what are the interventions that we all benefit from investing in more collaboratively. And I think the baseline for being able to identify those does actually come when this is being championed by more than just individual organisations, businesses, or when you're taking a very insular look at it. I think also that when sustainable finance starts coming to the table, that's also when the benefits can actually be unlocked at a value chain level. We certainly were very interested in the Woolmark example of where they were able to deploy the sustainable finance benefit by looking at it across the value chain. I think some of those are outstanding case studies to be looking for, to be saying we shouldn't be looking at this just individually, but actually a little bit more holistically. And the baseline for that, I think, is making sure, first of all, that we're all speaking the same language, but also that we're able to, be baselining things off a common set of metrics.
Yeah, and hopefully the TNFD supported Nature Positive Initiative State of Nature Metrics piloting, which is going on at the moment, which has some activity really excitingly in Australia as well, will really contribute to that, getting that kind of consistent set of metrics. Ashley, I was interested from your similar kind of thing. You know, you're starting out, you're looking at a very diverse and large portfolio. There's a whole lot of stress and distress from a nature perspective within that. I remember in the early days of TNFD, and Tony and I spoke about this a long time ago, this sense of it may not be a sense to actually step away from and divest, but a chance to actually to lean in, engage, support, and improve uplift. Whether you're seeing those types of behaviours in asset management?
Absolutely. I mean, it's central to our own mission. I think that, and frankly, across most of the investors that I talk to, and frankly, just are in the market, there is this common agreement now that it's engagement rather than divestment is the is the most effective tool here. Now, there are very, very good cases where divestment is a very effective and powerful tool and should be used. But I would say in the majority of cases, from an investor perspective, the most effective way is being actually a useful thought partner with companies. And this is really what I try and do, and we try and do with our companies, is that we're invested in these companies because we think they're really good companies and we want them to be really successful. And as I said, I think that phrasing this as a journey in which we as an investor are going on with our companies is really important here. So we try and sort of do this step by step with our companies, and we really try and sort of work them through this. And often what we do is with our companies is actually spend quite a bit of time going into the details of some of these. So for example, we often spend time debating, what is financially material to a business? What are the metrics that you could use to do that? But I think what is becoming clearer to us is that I think for a lot of companies now, they've reached a point where they are convinced that there is a downside risk from nature. In fact, we did a survey of our companies just earlier this year, where we asked them we asked them, do you see nature as a risk? 90% of them said, yes, we see nature as a risk. And we said, why is this a risk? And 45% of all companies that we asked said that they saw nature as a physical risk, so a physical dependency risk for their business. Now, when we asked these companies 6 years ago, we asked them in 2019, the same for climate, about a third of them said that they thought climate was a physical risk to their business. Now, what we're seeing is two things. I think increased recognition across the board that these things are risks and are dependency risks to the business. But we're seeing nature, I think, now framed as a physical risk to this. So a lot of the time we spend with our companies now is thinking, okay, we understand the downside risk exposure. Now we understand the magnitude of that. What is the magnitude of the investment, and what is the magnitude of the upside opportunity that we can use to do that? Now, I think that switch is happening. A lot of companies that I talk to that haven't necessarily got very, very concrete views on these are all the potential upsides, but by starting with the downside and having a simple financial metric that says, I am on the hook for this risk, and in order to mitigate this risk, I can compare this with the size of this investment or this potential upside. That is a useful way in which you can get to the CFOs, which you can get to the board and actually debate these issues on a like-for-like basis, rather than kind of shadow boxing and talking across purposes.
Yeah, I think it's a very good analogy, and I think there was a lot of shadow boxing done before we started to bring in the financial piece into that conversation. As Tony said, that engaging with boards, but also the CFO, being able to have a common language to talk about this. Estelle, similar reflections from you. Tony said investors are getting more sophisticated in their questions. Ashley's kind of given some examples of how that sophistication is playing out for his business. How investors are using stewardship and engagement to start to influence corporate behaviour, particularly for our region here in Australia and Aotearoa, New Zealand.
Yeah. Look, that's absolutely right. I think, to quote Tony just before, like, what investors are saying to their companies is get your head around this now and don't delay. So RIAA run some research, comprehensive sort of survey of investors in Australia and New Zealand, and the research from 2 years ago shows that for New Zealand, biodiversity or nature is the fourth most popular issue that investors engage with investee companies on. So that's after climate change, DEI and human rights, and then nature. And in Australia it was fifth, and I would expect it has moved up. So we'll be doing this research again at the beginning of next year. In terms of the kind of strategies they're using, sort of at an individual investor level, they are doing what Ashley was talking about, like looking at what's most financially material to a portfolio or business. So they may look at something like deforestation and water use. They may look at it by sector, because there are now there's quite a lot of understanding now as to which sectors are most dependent or at risk or impact the most on nature. But they'll also look at geographic areas. And then they're using increasingly sophisticated and available ESG data and portfolio assessment tools. There are lots of tools now out there that help determine which companies to target on what issues. And they'll start, as we were talking about before, by simply asking companies about their strategy, they'll try and understand their supply chains, they'll look at what data is available, look at disclosures and governance and so on. But they're increasingly looking to set metrics to track the company's improvements over time. And they are, as Ashley said, getting quite granular. So looking at site level targets, looking at goals around, for example, having a net positive impact on biodiversity in the area, or that a certain asset or project is not disruptive to migration patterns, for example, or that they'll be controlling weeds or pests and so on by a company or even at an asset level. And so they'll be tracking this over time, and it's really increasingly understood by investors that stewardship of a company on any issue can't just be a one-off conversation. So as Ashley mentioned, this is ongoing and it's iterative. And they're doing this in equities portfolios, they're doing it in private markets increasingly. I think, private markets are really ballooning, and we'll be increasingly seeing investors seeking to ensure that nature is a consideration from day one for those companies they're invested in. And I think also just to note, there's a lot of collaboration going on between investors. So the collaborative initiatives like Nature Action 100, like the Principles for Responsible Investment Spring Initiative are continuing. And I think we'll also start to see shareholder proposals at AGMs, like we have seen with climate change starting to appear down the track. And then one other point to make is just around investors looking at this from a systems perspective. So they're increasingly looking at sort of whole portfolios, particularly those large universal investors, and recognising that this is an issue that is far bigger than just one company or even several companies. So they're looking at policy advocacy. They're wanting to make sure we have really strong baseline environmental laws, and they want to make sure they're enforced as well. And they're advocating for, things like accessibility of data, which RIAA has been involved in with the Australian government. So we're seeing this sort of system-wide stewardship in particular on a whole lot of issues like modern slavery, like climate reporting and so on. And I think we'll be seeing more of it in relation to nature as well. Yeah, a quick call out, Guy, for the nature toolkit that RIAA released for any investors that are on the call and want to know more. That's really comprehensive, co-led by the formidable Guy Williams, and we'll pop a link in the chat function here as well.
Thanks, Estelle. There's a couple of things in that I just wanted to put back to the other panelists as well. I think, Sally, collaboration, sharing what good looks like, working across sectors and across industry, I think is obviously a really amazing thing. We don't have the time to kind of silo action and success. Just kind of what you're seeing, Sally, particularly from the rest of the economy here in Australia in terms of initiatives. I know you're involved in a number of them around trying to share and leverage and collaborate.
Yeah, I think probably we're 3 years into the Australian Climate Leaders Coalition having a nature working group, and over that time it has been very much about building capability and capacity, learning and creating tools whereby we can sort of take that initial stab at materiality assessment in a credible way to build the first business cases for getting started. And now we're looking to see how we actually can create pilots for looking how we can unlock value across a value chain level, and what are the systems that we will need to influence in order to do that, because there is a really, none of these things happen in isolation. And I think what we're all learning is we're all complicit when it comes to improvements to nature, and also to benefiting from the opportunities that get revealed along the way. So it's not just from the person who has the primary interface with nature, but also the people creating the demand and the market for those products. But the financing solutions, the insurance component, because hopefully we're bringing climate mitigation to the table as we're doing some of these things. So we're looking to pilot a couple of different impact projects to see what we can learn along the way, and largely to try and fill that void that I was sort of alluding to, I think, at the beginning, where we've got this disconnect between where we've got incredibly valuable data set as it comes to environmental impact, but it doesn't translate necessarily into what are the business drivers, like when you're talking about it, impact on revenue or margin or EBIT or cost of capital, or those sorts of things. And we're sort of saying that if we can't take the insights from nature assessment and translate it into something that appears on the CEO dashboard, we're going to be hard up when it comes to actually systemizing this into our business. And we don't think it's an unsolvable problem, but it is something that we're going to have to collaborate on and work together and bring, lots of different perspectives in order to, make progress on that. Interestingly, what we learn along the way, hopefully we're all taking those insights back to within our individual approaches and really, bolstering our own nature approaches that we're working with at a day-to-day level.
Thank you. I'm feeling that immense power comes with holding the MC mic. Like I could go on all day and do a Ricky Gervais at the Golden Globes and just keep talking and talking until I get kicked off. But there's a lot of really good questions coming through that we probably won't get to. We've probably got time for one or two more questions. But I'll get to a few now. Ben from Climate Friendly, I think it's probably relevant for you, Ashley, but it was following on from Estelle's thing around whether we can assess risk at that higher systemic portfolio level, and whether we have enough information from, say, macroeconomic quantification to be able to start to make smart decisions, or whether we need to draw it down to that more microeconomic level. Just know from your experiences whether you can do enough at that higher level, or whether we really need to draw down.
Yeah, it's a bit of a fundamental question that I think we're all thinking through at the moment. And I know this is something, Tony, that we're thinking through within the TNFD about how we can make some of the risk assessment guidance that is already out there, particularly around scenario analysis, a bit more relevant to our company. So answering directly these questions. But I spent a lot of time actually prior to this role doing exactly this. And one thing we actually found was that whereas climate, there was a big focus on these kind of system level risks. We actually found with nature, the best way to quantify financial materiality was often to be a bit more specific about the area and the type of risk you were looking at. Now, what I don't mean here is that you have to go to every single site that you're doing something in and every single location. But this is that I think we do have to acknowledge that nature is a bit more granular than climate in many ways. And I think for most businesses, the way to do that is to think about individual geographies or kind of individual parts of the value chain, and think about how ecosystems are changing in those individual geographies, and then look at scaling up. Because what I think worries us slightly from a macroeconomic perspective is that the understanding of these risks from a nature perspective on the macroeconomy isn't really there. And if you look at a lot of the macroeconomic models that do this, and they look at the systemic risk from nature, actually the risks are really, really small when we try and quantify these things. So I think there is a bit of a danger in relying too much on these kind of top-down systematic views of nature. Now, that is not to say that we shouldn't think about this at a systemic level. We shouldn't think about the really bad things that could happen. What if there's a major pest outbreak? What if we have mass droughts across at a continental level? And we should stress test our businesses to be resilient to those systemic risks. But what I'm saying is, I don't think we should expect too much of sophisticated models to tell us the answers. I think we need to be a bit more creative in this. And I think if you look at the TNFD scenario guidance that is out there, it's saying that I think there is a sort of a mix of approaches that may be required based on the type of question you're trying to answer. And I think this best practice, as with climate, has matured a lot over time. I think we're getting comfortable with the questions we can answer. We will get there quickly with nature, but I think we should be sort of honest about where the uncertainties are and what we can do well now.
Can I just add to that, Guy? Very quickly, I think just building on Ashley's comments, we're working closely with the Network for Greening the Financial System, which is a sort of global network of the world's central banks. And they're looking at, obviously, systemic risk to financial systems and to the global economy. And they're interested in nature risk scenarios. But one of the things that's interesting is that if you just try and replicate the approach to climate scenarios, you quickly run into a number of conceptual brick walls. And obviously at the climate level, we have one atmosphere, we have a carbon budget as a sort of organizing concept. So you can run these macro level scenarios for atmospheric changes at a global level, global warming, a global carbon budget. Those parameters don't exist for nature. So we do need a bit more, to Ashley's point, we do need a bit more of a bottom-up approach. And attempts coming top down have really got a bit stuck in terms of providing that guidance for nature. So it is an interesting conceptual challenge because, of course, we try to replicate our carbon brain and apply it to everything else that applies to nature. The other thing I just add to Ashley's point is a lot of people still think, when they think of nature, they think of floods and bushfires and earthquakes. They think of sort of the natural catastrophe, natural disaster aspect of nature. But if we go back to the work of Partha Dasgupta in the Dasgupta Review on the Economics of Biodiversity, he made this really powerful point about most of nature is silent, invisible, and mobile. And it's those things that I think we have to be trying to unveil, right? A silent, invisible, and mobile, by definition, is really hard to do something about, right? It's sort of, I think of submarines in a military context. That's why they're so dangerous, because they're silent, basically invisible, and they're mobile. We have a lot of those threats or a lot of those risks in the nature environment that could derail supply chains of a business. And so it's making those things visible and figuring out what to do about them that I think is our challenge. If we just get focused on bushfires and droughts and floods, the insurance sector's already figured out how to predict those, or how to price those risks. I think the real work we have to do is around all of the other aspects of nature, which are much harder for us to understand and respond to. And they're highly localized.
Yeah, thank you. We've run up against time. There's a whole lot of questions that are still coming through. I think through RIAA and through the TNFD consultation group, we're going to try our best to try and respond to those. Please going to get in touch if you have any particular questions for any of our panelists today. Just before I hand over to TJ from TNFD, I just want to get a final closing remark from our panelists. Your quick insight, your 30-second recommendation for those that are needing to make that business case internally now, what they can do to kind of get started. And I'll go with you, Tony, first, for the final takeaway.
Well, I would just encourage those people who haven't got started yet to start with the simple question, how is our business dependent on nature? And that's a good conversation to have, whether it's with junior colleagues around the coffee machine, or downstairs at the local coffee shop, as it would happen in Australia, or with the CEO and the CFO, right? To start a conversation around dependencies. And I think that's the first door to open, and it then unpacks a number of other things that will appear. So it's sort of like a process of unlocking one door to then reveal the next one. But I think the first one to start with is, what are the critical dependencies in our business? And it really echoes a lot of what we've heard from Sally today.
Sally, handing over to you.
I think you've got to unlock the power of storytelling about nature. Climate's really boring. You can't see it. It's really dull and no one understands it, whereas everyone understands nature. So our whole program started with the hypothesis of how can fish oil be our #1 product if there were no fish to catch. And being able to quantify and bring that to life has actually been the beginning of, many years into our journey with nature. So I think embrace the fact that it is location-based, because, there's some powerful storytelling, I think, which is a really important way to engage disparate stakeholders that actually have an enthusiasm for, growing their knowledge on this.
Thank you. Estelle, final reflection.
Yeah, look, I think sort of in terms of making the business case internally, linking this with climate is really key. You know, we have the climate reporting in Australia and New Zealand now. You can take TNFD and kind of pop it on top of TCFD, and you've got essentially the same thing with a couple more kind of reporting requirements. But that's really key to getting internal C-suite boards and so on comfortable with this. It's not that scary. And I'll quote your CEO, Sally's boss, who I heard say at one point, have a crack at TNFD, have a crack at looking at nature and climate together.
That sounds like Alistair. And Ashley, final remarks.
Yeah, sure. First bit of advice would be to frame this as a long-term resilience issue, and really think about how this fits into, you know, a company's long-term brand. So, you know, are we a company that, you know, manages risk, knows our customers, make the links to nature through those angles of really thinking what a good business is. And then the second one is really just start from the business. So start from what is financially material to my business? What are the cost streams? What are the revenue impacts? And then move out to, and how could nature impact that? It really narrows the decision space and avoids us sort of focusing on solving all the world's problems within one business. Solve the business's problems first.
Thank you so much. Apologies again to all of those who asked questions that we didn't get to. That's totally on me. But I hope you'll agree, amazing insights, really good reflections, and that's not on me, that's on the amazing panelists we had today. So thank you so much to Estelle, Ashley, Sally, and Tony. I think, Estelle, I can hand directly over to TJ to give us an update on some of the resources and adoption campaign from TNFD. So over to you, TJ.
Thank you. Thank you, Guy, and a very, very interesting discussion. I think most of the points were really covered by Tony and everybody else from the panelists, so I'll just be very, very quick. So as I think Tony and Estelle mentioned, that we have about 502 adopters as of last year in September. So the number has increased quite a bit, and we will announce the new number in this year at COP in Brazil. So I think this was quite an old story. So I would just come down to the APAC spotlight, I think, which is more relevant to this case. So in APAC specifically, we have about 300 companies who have confirmed adoption and are reporting against the TNFD framework. We have about 650 companies who are part of the TNFD forum, are engaging with us directly, whether it's with our knowledge, content, and our resources. And TNFD is overall engaging with 2,500 companies across the region, whether they are corporates or financial institutions, and they come from a diverse range of industries, whether it's infra, real estate, technology, and financial institutions, asset management, commercial banking, or investment banking. So a diverse set of institutions looking at TNFD and looking at nature-based risks specifically to understand those risks and eventually mitigate those risks and create more opportunities within that. I think one of the, I think the panelists said it very well, but I think one of the main points which people, ask is really like, why are organizations adopting the TNFD framework and the recommendations? So I think most of the points were discussed, but I think just to reiterate those points, I think it's really to prepare for the voluntary standards and the mandatory requirements coming in the future. Also we are working very, very closely with ISSB in their BEAS project. So a lot of things will come from there, and a lot of things will come from the research which is going in the BEAS project. There's also a lot of new commercial opportunities which are emerging from this area. We are seeing a lot of lending opportunities from banks and for corporates as well, when they're aligning themselves with the TNFD framework and understanding their nature-based risks and how they could mitigate those risks, and eventually showcase to investors and financial institutions, specifically in lending cases, to create those opportunities. We're also going to be launching our opportunities case studies soon, so you could have a look at that, of what sort of opportunities there are and how are organizations sourcing these sort of opportunities, aligning themselves with the TNFD framework. The next is really the resilience of business depends on nature. So I think Tony mentioned that, just managing your risk and, understanding your risk is just good for business. So you should not take it as a reporting exercise. You should think it as more of how you can grow your business, understand your risks, and then eventually mitigate those risks. So it's just good for business overall. And then, this was also mentioned by Tony that investors now see nature beyond climate and as a source of financial risk. So these are a couple of things which you should keep in mind when you're looking to adopt the TNFD framework and the recommendations. Just want to touch it quickly. So if your organization is reporting is the GRI standard or at the ESRS, then you don't have to duplicate your efforts to align yourself with TNFD. You can just download the mapping document from the website, and that mapping document can be stated in your annual report, which kind of explains how you're aligning yourself with the GRI 101 to TNFD, which avoids duplication of effort and just makes things easier and straightforward. So we're also working on a couple of other initiatives like this to to avoid duplication of work. Just in terms of a lot of guidance available on the TNFD website, there is a lot of sector guidance available, which you can see on your screen. I will share the presentation with you all, and then you can just click on the link or the QR code, and then everything is available on the website, no matter what industry you come from. I think one of the very important questions is really about upskilling your own teams externally and internally. So if you want to upskill yourself, you can just go to the TNFD website under the Knowledge Hub, log into the Learning Lab. It's self-paced learning. You can it's absolutely free of cost and do a TNFD online course, or also you can download the capacity building materials and put your logo on it. It's white label, and then start training. If you're a learning-based organization, start training organizations around in the region or globally. All the other links I've already shared in the chat, so you could just go and have a look of all the different material available. So I think Tony also shared this one. So we have we have just come out with new case studies on the GRI TNFD. So if you're reporting against GRI, you could just have a look at those case studies. Tony also mentioned on the evidence review on the financial effects on nature-related risks. So you could just go and have a look there. We have also come up with 2 new publications we are working on. One is on oceans and one is on financial on the financial effects of nature as well. So these are still open for consultation, and their deadline is 3rd of November, if I remember correctly. And then you could provide consultation, and I will share the link for those as well on the over email. That's led by our technical team, Emily. And last but not the least, if you're considering to align yourself with the TNFD recommendations, and if you're considering to start doing TNFD in the future, please feel free to be an adopter. I think it's really, more than anything else, is really to showcase your leadership, that you care about nature, and to showcase other organizations, and being upfront in the investor market in the really landscape of managing those nature-based risks and then coming out as a leader in the space. So yeah, that's about it. If you have any other questions, please just feel free to reach out to me, and then we can take it from there. Yeah, thank you.
Great. Thank you so much for that, TJ. Thank you so much for everybody for joining us. And thank you so much in particular to our amazing speakers today. I think sort of some key takeouts, and I'll invite the panel to join in here as well, if you like, but really that pricing signals are flowing through the economy. We are seeing that already, as Tony highlighted. We're seeing, as TJ just mentioned, regulations globally starting to catch up, and I would expect some mandatory requirements, reporting requirements soon. But I think another thing Tony mentioned, think about this in terms of value and resilience, not just compliance. Even if you are preparing for a mandatory regime or preparing because you know that investors will be wanting you to report voluntarily, this is actually about value creation, value protection, and resilience of your assets, company, and investments. Also understand that this is moving really fast. So we've got more and more companies committing to reporting against the TNFD framework, as we've heard, and there's another opportunity to become a TNFD adopter at the next COP as well. And TNFD, I think that whole point around it being really closely compatible with climate reporting regimes is really really important. So do use this linkage to make the business case internally and incorporate this into your strategy and governance structures first of all. And there's obviously a wealth of data and tools available, for boards, for assessors, and so on. And Tony and TJ have been through quite a lot that TNFD has freely available. So, really ask, why do you need to consider, instead of why do you need to consider nature risk, why are you not considering it? What's the reason that you have for not doing this? And I might also add, be prepared for this to be hard. We will see uncomfortable truths being revealed, but the costs of doing nothing really are mounting every day. So I'll leave you with that thought. Now, my marketing team won't forgive me if I don't show this next slide. We have a conference coming up in Aotearoa on the 18th of September. We have a fantastic panel on nature and these particular topics prepared. So if you're in New Zealand, do get along to that in Auckland. Thanks so much again to our panelists. Thank you for joining us, everybody. Good luck on your nature journey.